yesterday, deal makers on Wall Street are preparing for more White House intervention in private sector deals. The White House has shown that it is willing to go guns blaring into the private sector and back very, very specific companies that it deems as strategically important. And in doing so, it has proven time and time again that traders that can get in ahead of these moves or even...
The White House is doing things. Okay. So let's talk about Bloom Energy. Let's talk about SanDisk. And a Service Titan. Contractor SaaS. Okay, so we'll take a look at that. They just had earnings. Here we go. Trump's energy stocks will help you retire early. There's one stock that is about to skyrocket. The company is Bloom Energy, ticker symbol BE. They do mobile power for data centers, and the mobile part means they will literally divert natural gas from a close by pipeline and generate electricity with a giant, basically wheeled converter that they can drive around the country to where these new data centers are being built. So you don't have to wait months to get a power plant built. At best, it's more like years. And that's part of why Elon's Colossus data center was able to get up and running so fast. There are a couple other companies that are super poised to go up. They're constructive, you would say, in a trader, investor language. The charts look great. The companies are SanDisk, ticker symbol SNDK. They're a memory stock. Memory has a huge backlog. The demand's high from companies like OpenAI. Rumor has it that Sam Altman bought a ton of memory, not necessarily with the intention to use it immediately, but perhaps with a slight strategy of cornering the market without using that word. Perhaps you could say getting an initial forward-looking supply. I don't know what language their team is going to come up with if that ever it becomes bubbling up to the news cycle. But SanDisk looks great. A lot of other memory stocks have been doing well as well. Seagate, Micron, and Western Digital. There's one other company that is a little under the radar I want to keep on your radar. It's Service Titan, ticker symbol TTAN. They recently had earnings. The chart is setting up in a flag. Of course, a flag indicating that the price is beginning to be agreed upon, so it's about to break one way or the other. Of course, with a tight stop, you can use that to your advantage. It's sort of a betting scenario. You win 10, lose 1, that type of strategy. Company is a software as a service for contractors. Software not doing incredibly, but this company is. So let's jump into these charts, starting with Bloom Energy.
This is Sam Putnam.
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 So here's Bloom Energy's chart, and it's not the beautiful GSAT chart you might be hoping for, where you have some type of flag like this. Everybody and their mother says, something is about to happen. You're up or down. It's not the frog chart where that opportunity also seemed to be shaping up. So there are flags that have formed and there's been breakouts, but there's also been opportunities recently on bounces with higher lows. So here's a higher low right here, and we did see a move up, and now we're seeing a little bit of an undercut right here with a reclaim. So this is a higher low as well. And you might say, well, that's great, but don't we want something like Wolf where you got a higher low and then the next low is higher as well? Like, well, okay, that's the best, but at the same time, these companies don't just go up forever. I mean, this might fail here. So you have to sort of stack all of these ideal outcomes one on top of another. And often what you'll get is breakdowns like this. So, you find opportunities that look like flags, you take an at bat, and sometimes you take a quick loss. So this is a loss of, one, you could say, $1 a share, something like that. And then when you do get that frog type opportunity, you can get that $10 a share, which works out to 15% on a $60 stock. So here's the opportunity right here on Bloom Energy. You have this pullback and then you have a reclaim, and it looks pretty sloppy here. Like, what are you risking off of? This is in the middle of nowhere. It's like, well, it's tough to buy down here because take a stock like TE, another energy stock. Let's say you were going to buy this pullback. It's like, or this pullback. You don't really want to catch a falling knife, especially on a stock that's gone straight up. This is reminiscent of SanDisk, actually, which we're going to talk about. Shorts got in after this first down candle. And the presence of shorts doesn't necessarily necessitate that the stock's going to go down. Of course, shorts are just as clueless as longs a lot of the time. But what it does mean is there's a lot of selling pressure. And you'll see that on incredibly small stocks if you ever are risky enough to trade them, that sometimes if enough shorts get in a stock at a certain time, what can happen initially is there's so much selling pressure because shorting is selling. You borrow the shares from a long and then you sell them on behalf of the long and you pocket the difference. The long actually gets a, lower cost average when they get the shares back, right? Not actually, but we're just going to say that's how it works. Selling is the opposite of buying, right? So if you sell up here and enough people sell, there's going to be selling pressure. Of course, the nuance is that if, so many people start selling that someone decides to mess with them and it's a small enough stock, one buyer or one group of buyers can overwhelm the sellers and buy up the stock, and then all the sellers suddenly have to buy as well, aka cover their position, and the stock shoots up and the sellers, the shorts lose money. Now, this isn't a tutorial on shorting. If you want to, get into that, you can, but it's hard. Okay, so Bloom Energy, though, is this long opportunity, and you can see it more clearly on, say, a 30-day chart. Coming into open here, we're definitely getting a little bit of compression here. We went up, we went down, we're coming back to this price agreement level. And I think this level is important. 109, 1010, 110, call it this high right here. So pick something that works for you. Risk $1, look for $10 at a minimum, maybe risk $2, look for $20. But I think there is definitely an opportunity that works risk reward wise. Does it follow the market a little bit? Of course it does. This is the market, the green overlay in the background. Okay. But also, the market went up significantly. Bloom was a little delayed. And if we look at the chart as a whole and zooming out, yes, okay, the market went up, but this thing really went up. So they're not totally correlated. And that's the reason to look at individual stocks instead of the market. So that's the level for Bloom Energy. As far as what they do, this is what they do, and these are their earnings. If I'm even looking at the company that we want to look at, BE is the company. notably, ChatGPT having a lot more competition from Gemini in terms of financial information, if that's an interest of yours. So you can try that out. I'm still sticking with ChatGPT though. Here's the revenue up 57% year over year, 500 million of revenue. And I told you what they do. Okay, fuel cell systems for mobile, AI infrastructure, electricity generation. So we can jump into exactly how they generate that electricity on site. But if you're watching this video, I have to assume what's more interesting for you is actually saying, what stock to buy, because that's why you clicked on this video in the first place. So here's what you have to consider. People are going to be talking about the biggest stocks in the market. People are going to be talking about NVIDIA, but it's not doing anything. If you talk about Google, that's great that it had a great run, but now it's leveling off, so you can't really touch that. Amazon, same difference. Broadcom selling off some after earnings. TSM is still interesting, but after some of these moves like this, if it continues to fake breakout, there's going to be a lot of people stuck up here and they're just going to sell when the stock goes up there. So you have to, be aware of that. AMD is one of those that's equally just struggled to go up and been really a bother for traders that are trying to get in. So I guess I could go through each of these, but I don't want to, show you the wrong stocks. I think Tesla's interesting. I'll talk about that. Walmart as well, certainly interesting. While Schwab is powering up, I hate this godforsaken software so much, even though it's the best one. Somehow it just crashes. But this is another company to take a look at besides SanDisk, besides Bloom Energy, Service Titan. So here's what the company does while that's powering up. They do trade business software as a service. And if you're uninterested in software as a service right now, I don't blame you. Salesforce CRM is doing horribly. ServiceNow not doing great either. And of course, by horribly, I mean their current price compared to where they've been. Over the long term, they're doing great. But this is a vertical SaaS. So there is a possibility that some of the super broad-based software as a services just get wiped out by, tools like Cursor. If you've come across that, Cursor.ai, some of these AI agentic companies that basically have found a way to code on behalf of the user, and obviously software engineers are shaking their boots right now. This is a deca-billion-dollar company, Cursor. Okay, programmers know about it. It's a Y Combinator company. It's definitely the future. Okay, and this is the Titan chart. So what's happening is these verticalized softwares seem to be doing okay, and Titan's in that category. There's an entire private equity company that has done super well rolling these up. I don't know how long that's going to work in the long term, but every single vertical needs its own software, and the argument about AI is that sure, it's able to help with your coding, help with your software development for, employees at these big companies. So it's a AI for the AI engineers. How's that for confusing? But in terms of actually knowing what specific use cases a contractor needs, it's great. It can build a React website. React is a way to build a website. It's kind of like WordPress, if you've heard of that, or Squarespace or Wix. But in terms of doing something useful, these softwares are still doing super well. So that's the bull case for Service Titan. If you look at some of these other companies, CRM or ServiceNow, They are bottoming a little bit right now, but still a serious downtrend. So maybe now's a good time for software. CRM, again, bottoming. Earnings is solid, but you have to be careful. Are you buying a meta type of dip, or are you buying a dip that actually has some staying power? So some of these rare earth dips seem to be, more interesting. This is a 40% bounce. Of course, it's risky. It's a lot more of an illiquid company, USAR is, versus MP, which has that government stake. So you have to balance. Do you want, lesser gain or more stability? And stability comes in the form of liquidity. They come hand in hand. So I think this is a good balance. TTAN is the ticker, and you can see the flag shaping up here. It's definitely interesting on an intraday chart as well. It looks like something that could explode to the upside. Similar to a frog, F-R-O-G, another software name that we've looked at. So one company we didn't look at yet that is on this buy idea list is SanDisk. So it's not so much a flag as you might want. Really, you might want it to come back a little bit, and then go something like this and sort of wedge up and then, go like that. But you can't always get what you want. It is pulling back a little bit, which is great after a big day yesterday. So I think it's interesting right now because you can buy off of this close 2 days ago. So that is right here. You can see that close here. And you really can risk $1 or $2 to make 20. So 35 to 55. That's a 8-10%, or not even a 10% gain. That this could definitely provide you. Micron, and that's just for your first trims on the position where you start to sell some. Micron's a little extended, so I'd like this to go sideways and let earnings get out of the way before you mess with that. But if earnings is good, that'll of course help a SanDisk position. Western Digital's a little extended too. Seagate also in that bucket. So I think the only one that isn't extended is SanDisk. There definitely were some shorts in here, but they've sort of, I don't know if they're still in at this point. If they are, that's great because they're going to cover at some point. And this is, they probably shorted after this first red candle. The good ones got in here and have a little bit of a higher average, or, the lucky ones predicted it perfectly on this particular instance. But if they do have to cover, this thing is going to squeeze, which is good for us. So that's SanDisk. If it were to just go straight up and hit this high, and I don't mean straight up, but even like a tiny pullback and then straight up, it's probably going to fail, right? Because this is a pretty fast rebound. But, the longer it can build out a base, something like this, and approach this high or even slightly go above it and then fail under it and then build out more of a base, that's going to be really attractive because it shows that people, are not euphorically buying it, but they are consistently buying it, which is what can lead to a big move to the upside. They actually want to own the stock. They're not just trying to flip it. So as far as other companies that definitely are on the list of interesting, there's actually quite a few. It would be great if we could see them. That would be wonderful, Schwab. So here's one. ONDS, this drone stock, is definitely setting up, just been wedging up. If it can go sideways a little bit, that would be great. It's hard to buy a company that's just channeling upwards like there. If you look at CoreWeave, that was in the category of channeling. It was thought that, this $14 billion Meta deal would be the spark to light CoreWeave, but something about the connection to Core, is the company they were trying to buy, Core Scientific, CORZ, which, that acquisition did not go through. There was actually something uncovered about, I don't know if it was CoreWeave's ability to pay or CoreWeave's ability to get contracts, but there was good reason for this to fail. It wasn't some sort of you know, uh, spirited activists, nonsensical rejection. There was a like a scientifically sensical cited reason, but CoreWeave recently, I don't know if there's rumors that this company might get a deal or get acquired, but there's definitely had a little bounce. Now it's kind of not that interesting. It's tough when you just have these failures, and it's kind of tight, I guess, but it would be great to have this build a little bit, and I don't know what that's going to look like. There's just not a lot of energy here. A lot of these stocks have right now this sort of energy where if you look at a Nebius, which is the NVIDIA investment, NVIDIA invested $700 million in this company. They're like a GPU layer, infrastructure layer. So it had a little bounce, but it's sort of fading. It's just no energy in this stock. And so if you literally look at the energy stocks, BE, there's something here, right? Sure, there's not much volume, but you typically don't want much volume when you're looking to hop into or anticipate a possible breakout. No one wants to anticipate, but it's great to get in there early because if you do get in too late, like a GEV, great, you got in when all the volume came in, which means all the demand you participated in. So you want to get in before that demand, so it lifts you. As far as other energy stocks, Dyno just sort of sold off. PARR sold off some. EQT, natural gas, is sold off. If you look at the natural gas futures, it's just following that. And then, the oil stocks, they do follow the price of crude, but on a micro level. So if you look at ExxonMobil, it's wedging up. So this could bring back ExxonMobil a little bit, the decrease in the price of crude oil, which would be actually great if you are an owner of this. You can see, it's hard to exactly see, but the channel is 6% here, maybe even 6%, 5% here, maybe 4% here, 3%. It is narrowing. So eventually this could pull a GEV and have a big move to the upside. But there's a reason I'm looking at Bloom Energy. It has had the largest move. It is in the hottest sector, which is the mobile data storage. And I'm not saying to buy it right here, but I'm saying if you do have an interest in it, now is a spot where you can get super tight risk reward. And you might be wrong twice before you ultimately make, $10, $20, $30 or more on this stock. And that's okay, as long as you're losing $1 or losing $2. And SanDisk, again, the memory stocks are slightly extended, but it's certainly in the ballpark of, wedges turning into flags. It's not just channeling straight up, it is constricting. And, it might reject here. It might form something even more tight that makes it more favorable, but better to have it on your radar now rather than later. As far as earnings reactions, Titan and levels, I talked about 110. You have to kind of turn to, you can look at CRM, that had that positive earnings reaction, but it's had a couple of wicks, a couple of failures that there's some people stuck here. So, it might blow through those, but they also might sell it down a little bit. So definitely keep an eye on it, but I do think Titan is a little more favorable just in terms of lack of selling pressure. It's also more liquid, so there's a fair number of people who can't play this at all. It only trades as little as $50 million a day on certain cases, which might sound like a lot until you realize you can only put 100th of that 500K in at any click of a button. Otherwise, you're moving the stock, which means you're suddenly trading not only the company but also yourself, which is not good at all. So those are the ideas. BE, Bloom Energy, SanDisk, SNDK, TTAN, Service Titan. If you like these ideas, hit that like button for the YouTube algo. If you want a free course on how to find the next NVIDIA without gambling on startups, hit that subscribe. Post that in the YouTube posts once a month. And if you want to get analysis on stocks on an up-to-date fashion, head over to stockscommunity.com. You'll see the live recordings as soon as you join that trial, and you can ask as many questions as you want. So some people, dip their toes in and ask a ton of questions. Some people don't ask very many questions and just want to sort of observe, maybe show up to watch the recordings rather than show up to the live Q&As, but it's open for you. So it's for busy people. So check that out if that is you.
Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
What about
even right after these moves, have a ton of
Tesla
opportunity for trading and I think as well long-term upside. Okay, quick reminder, Charlie, what is the current government portfolio this year? Well, so far this year in terms of direct equity stake, you have Intel with a 10% equity stake for Uncle Sam, MP Materials with a 15% equity stake plus profit sharing. You have Lithium Americas LAC with a 5% stake plus 5% stake in their Thacker Pass mine. You have Triology Metals with a 10% stake plus warrants for another 7.5% stake. And then you have US Steel, where the government owns what they call a golden share and allows them government veto power over plant closures and major decisions. So these are some of the most aggressive.
So I do think Tesla is going to break out at some point. I don't know exactly when that's going to be, but it looks like it's setting up. I mean, unless I'm blind. Does that not look interesting to you? It's about to open. Could fail here, of course, but you know what? It also might not fail, so.
Positions the government has, but these are far from the only ones. In fact, the government has found a lot of different ways to back companies this year. We mapped out this whole chart for you, but let me pull up the individual sections. So you've got CHIPS Act grants pending equity conversion for companies like TSMC, Micron, Samsung, SK Hynix, revenue sharing agreements with NVIDIA and AMD, China chip exports. You have DPA loans plus warrants. You have trade deal investments and tariff-driven U.S. investments where a company will actually pledge to invest a ton in the U.S., specifically to avoid tariffs. Now, how do companies usually react when they get very, very aggressive government intervention? There's a very, very clear pattern.
All right. If you're on X or YouTube, I can see your comments, which are great. Well, your comments might not be great, but it's great that I can see them. Try to find some stocks that are broadly interesting. Gold, I think, looks strong enough. So, yeah. Maybe some profit taking, but should be good. I think that breakout is coming. But in terms of stocks that haven't gone yet, God, this looks horrible. Really got to zoom in to see these in detail. Let's see. Teradyne looks okay, actually. Good if it went sideways a little more. But DVTX is taking forever. Could buy GCT actually. This actually only went to 40.5, so you have to ignore that. Oh, that's a crazy stick. Gotta get rid of some of these stocks. Why do these just move so slowly? Ooh, this one's starting to get tight. Label. It's probably going to pull back one more time, hopefully. But that's definitely on watch. It's not a stock, it's a Bitcoin. I mean biotech ETF. So close enough, right? Where were we? What up here? Maybe here? This looks pretty boring. This has been a challenging one for a while. I don't know how to get a PPTA move like that. Devin might go. LEU. Could be a change of character. It's just had one failed breakout. Core just marching up. If you see something that's interesting, shout it out, but I'm not seeing too much. In fact, this EQT I think has got to go. Gold, of course, going. VRT can go as well, although maybe that's still building out something. I don't know. Semis. Quanta has been interesting for a while. Kind of slow. Reddit rolled over. Texas Instruments remains interesting, but it keeps failing here. Mag's a little bit of support, but it's just so slow moving. AMPX batteries, it's okay. Intel's got to go. Silver, can't buy that right now. Estee Lauder failed. EPAM. Frog needs to go sideways. Shop needs to go sideways. Visco sideways. ATI went. Man, this was a rough one to miss. The average daily range was 1 at the time back here, so still got a 10% move in 2 days. Pretty incredible. Broadcom can just kick rocks for a bit. F-Time. No, Galaxy's already up a little bit. EOS, if it can go sideways. Wilden's starting to go. Iron. Kind of want to get rid of Iron. Could be wrong, but it's not really speaking to me. And this maybe is interesting. AVAV. Arrow of Iron has to go. Jazz. Yikes. It's so hard to tell. Is this going to bounce? It's already below that high volume close earnings day level. GV went. Crowd is so slow. Lumen is just inching up. Hood is actually kind of interesting here. It's not really a falling knife. That's a lot of selling volume though. So I think I'm gonna have to say nay on that. TMC, GMAB, AMD, no, NXT. Talked about Micron, Hudson Bay. What is this? DQ. This is a power stock, I think. He goes sideways a little bit on that. AMD holding up, Rocket holding in there. Ulta is okay. Caterpillar just goes sideways. QS doing nothing. Dollar Tree sideways. ASTS. Little pullback would be nice on these space stocks. Dollar General. I guess if it can go over this level, it's interesting, but it's not there yet. Wolf kind of looks like it's going, doesn't it? Constructive. This one looks interesting, actually. I know I had it near the top of the list already. iRobot's got a chill. BTU talked about. BTU pulling back would be great. Kind of want to just take this iRobot off the list. I mean, a couple big. I think Wolf is probably a better bet than Zim. Futu's in the conversation circle. Oust, little pullback, reels in there. Baidu's okay. Yeah, Lebu looks great. CLS, ALB. I mean, EOS is interesting, but probably not today. It could be great to have a little more construction sideways. And Wolf might fail here. I mean, the SPY might fail. The SPY is failing. But we'll see. It'll be a battle. Okay. So we just did BE SanDisk and T-Tan. Oh man, Tessie's going. Dang. Is it going? That's the question. When it goes, it goes. But not sure you want to hold this over the weekend. It is over that 450 psychological level. So, yeah. Lemonade is pulling back a little. Gold is pumping. Lemonade might not cook after all that. So, that'll happen. Good stop for Lemonade. You know, below your entry. Same thing for gold. Gold's probably going to have a pullback at some point, but it hasn't happened yet. So, gold can trend too because people like it. They don't know what lemonade is, but gold is gold. That's good. Yeah. All right. So this is all shaping up fine here. Keep an eye on gold, keep an eye on lemonade. Whoops, LMND, guys. LMND. Guys, of course, being me. And then keep an eye on Tessie as well. So, man, I don't think. Oh, yeah, Wolf is going. Okay. So far. Definitely looked like Wolf was not going to go. They're going 451.3. Okay, so we'll see what happens here, but Tessie can definitely trend for sure. All right, let's jump in a little breakdown on the one and only Tessie, which is cooking right now. Not the only stock that's cooking, but at a time where the market is not cooking, it's good to look at the one that is, right?
Phase 1, anticipatory run. This is when rumors start leaking. Insiders position, the stock starts creeping up before anything official drops. Phase 2, you get a post-announcement pop. The news hits, CNBC picks it up, retail piles in. You get that massive gap up. Triology Metals, for example, literally doubled overnight on their announcement. If you remember MP Materials, we called that one out well before the DoD deal, and that one went up massively as well. Phase 3, you have profit taking. The fast money takes profits. You see that initial pullback. And then phase 4, sell-off bottoming. The stock finds a floor. This is where smart money starts accumulating again. And then phase 5, you build up from that bottom. The stock establishes a new base with government backing as a structural support. This is where the real opportunity lives for longer term holders. Understanding these 5 phases is absolutely critical if you're going to play these stocks. Because if you chase phase...
Sorry, my brain is broken here. All right. Vehicle deliveries dropped in November. They got a downgrade from Morgan Stanley. But they did release an AI holiday update with Grok. It's a pretty ridiculous bunch of news. See what PL's connection to SpaceX is. And then I'm not really jonesing for Wolf news, but we'll see if they've actually gotten any news. Doesn't seem like it. All convertible preferred stock is into common stock. $10 billion in contracted revenue. Okay. What the heck? All right, well, we're just going to go with that. All right. Tessie's pumping, guys. Wow, this is crazy to talk about Tesla as an early stock. But here we are. This one stock can change early buyers' lives. I'm not a financial advisor, but some advisors might say to buy as much as possible before December 20th. The stock is Tesla, ticker symbol TSLA. And you might say, well, I've heard of that one, Sam. That's not a stock to be early to. And I would say it is. They don't even have humanoids as a product you can purchase. They don't even have full self-driving. They're barely rolling it out in Texas. They've had some news that has depressed the stock price recently, including lower delivery numbers in November, some lower sales in Europe. And you know what? They've got some like tchotchke type updates. You know, if you have a Tesla and you have Grok, which is their version of ChatGPT, you get like a light show with their recent software update. But there's not been a ton of super bright, exciting news for Tesla, even though we have these massive tailwinds behind them, like autonomous vehicles and robotics taking over basically labor. No one wants to say it. So what that means is, despite all that, the stock has been going up recently. So what that tells us is there's a lot of buying interest. And if this turns, you know, a little bit of news comes in, a little bit of momentum comes in, Tesla could really skyrocket. So that is the supply and demand case for Tesla. There's a lot of demand right now, despite, you know, news. And that's kind of what you look for to know that you're in a bull market, is when the market can shrug off bad news and still go up. That's definitely a bull market. Now, this is not the market. It's just Tesla. It's kind of like the head of the snake of the meme market. You know, it's one of the biggest companies, you know, multi-trillion-dollar nearly company, but it's not the market as a whole. It is shrugging off news. It is going up. We're seeing that when the market goes up, companies like Tesla can go up even more. You know, when there's any type of big news, the election news brought Tesla up significantly. Elon and Trump are not really connected right now, so it's nice to not have that Trump overhang of a tweet or some sort of mention of drama that could tank Tesla. So that's good. We're really just looking at the chart, which I'll look at in just a minute. There's two other stocks that are really early, in my opinion. One is Planet Labs, ticker symbol PL. Coincidentally, is also related to Elon. SpaceX has plans for an IPO in 2026, and that pump has created a burst of stock price increase in all of these space stocks: SATS, ASTS, Rocket Lab, RKLB, Lunar, LUNR, even the laggard. Also in PL, which recently had earnings. So PL has that earnings solid reaction as well as the space pump going for it. So it's at a favorable spot right now. And they're not, you know, the connection to Tesla, or rather to SpaceX, which is a connection to Tesla indirectly, is a little spurious. Like, they do satellites, but it doesn't matter. I mean, people see a big headline like SpaceX IPO and they buy the whole basket of companies. So we saw that with robotics, RR going up, Serve going up, PDYN going up, Soon, SOUN having a little pop, iRobot, ticker symbol IRBT, having a big bunch of buying volume, even at a time when that stock was sort of left for dead. So That's PL. There's one other ticker that I want to keep your eyes on in addition to Tesla and PL, and that is ticker symbol WULF, WULF. TeraWulf, they're a Bitcoin miner turned AI data center compute provider. They indirectly have an almost $10 billion deal with Google through a company called FluidStack. So what they do is they basically take on some debt and some investors, and what they do is they rent out a data center. Well, they construct it and then own it, and then they rent it out to companies like Google, sometimes through intermediaries. Google is the sort of guarantor of FluidStack. So FluidStack is like a GPU infrastructure. You kind of have Google, application layer, GPU infrastructure provider like CoreWeave, FluidStack, I guess. And then you have the data center compute providers like TeraWulf, Cipher, CIFR, IREN, IREN. And then you have all the companies that actually make it happen. The people who know how data centers work, and the power companies as well. Ticker symbol BE, Bloom Energy, would be that level. So those are the 3 ideas. If you like these ideas, hit that like button for the algo, and let's jump into them.
This is Sam Putnam.
This
This is Sam Putnam.
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 So that was a pretty exhaustive intro, but let's just talk about what Tesla has been up against. Declining, November numbers, and then this robotaxi narrative not really happening yet. So we did have the solid holiday update though, so that's fun. Here's what the stock is up to. It looked like, a flag opportunity coming in today. It did have a little breakout so far. We'll see if it holds, but it's been on watch for a while. It was thought that it might break out back in early November. That took a turn for the worst. If we look at the market in early mid-November, that just did not help at all. This is what happened on the 13th, the 17th, and the 20th. And if we look at Tessie on those days, this is the 13th right here. This is the 17th. It impressively held. And then the 20th, it kind of held as well, but still had a pretty significant sell-off from highs. So it was kind of like a failed breakout that just got wrecked with the market. So since the market's been drifting up, Tesla has been going up as well, with the exception of this day. On the 8th, there was definitely some profit taking in Tesla, but it looks like it's giving a shot at getting up over that level. So, if it does come back a little bit, that would be a buying opportunity directly off of that level. Or, you could get in here and risk maybe this high, but as long as you're risking a level that you feel comfortable with, and I'll just tell you, you should feel comfortable with levels that are very close to your average. Otherwise, you're really betting instead of taking advantage of levels. So here, for example, if you bought at 458 right now and you risked for, I can't even say this out loud because it seems pretty stupid, but what I think makes more sense, you can't really buy when it's already up, whatever it is today. It's up 4%, 3%, and it moves 3% a day. So you want to make sure the percent it's up on a given day is not more than the percent it tends to move on a given day, right? Because then you're likely to have a pullback day. So you want to wait for some kind of tight day, which I realize already happened. So I'm giving you a little bit of stale information, but unless you're a day trader, you're probably okay with that. So that's Tesla. And then PL, you might say this is up a lot too. Like, what are you talking about? It's like, well, yeah, DXYZ, another ticker. This is the holding company of SpaceX. It's gone on a crazy 80% gain since the IPO news. All these, SPV, secondary share, employee share, repurchase, recontracting, agreements, secondary sales are making people stoked. I mean, the stock went up a lot. People who don't have access to those want to buy this now. It's going to be a little confusing as to what happens when SpaceX goes public? Is DXYZ going to sell off because you no longer need a intermediary vehicle to invest in SpaceX shares that has fees and stuff that's also public? It's a little screwy, but anyway, DXYZ went up, SATS went up like this. Here's ASTS, which I talked about previously, which pretty incredible move. I mean, 50% in just a couple weeks. So I do think PL is the one that's still interesting because it had earnings as well. So the earnings beat estimates and you have this high volume close. So buying it right now, is a little aggressive. Unless you risk yesterday's high, which would be 18. So risk 10 cents or something like that. But ideally, and I hate to say this, but the market sells off a little and then you can get this at like 17.8 or something like that. Or even better, PL really sells off and then goes back. I'm just giving you like the gory details here. Comes back and then tests that level right here, which is that close right here, and then goes. So that would be ideal. Sorry to make this more mathy than maybe it needs to be, but that's PL. And the other ticker that's interesting is Wolf. Did have a little bit of a failed breakout this morning. But I understand not everyone's going to see these videos, these ideas exactly as they happen. So sometimes the failed breakouts can actually be more advantageous to you, not so much to me, because obviously I want them to work as soon as I mention them. Otherwise, I wouldn't have mentioned them. But if this does fail to break out, you have this level that just is continuing to get hit 15.5 here close, here and opened, here it closed, here or whatever, here and open, here it close, here and open, here it close. The red ones, they open higher than they close, right? Pretty simple. Okay, so if it comes back to 15.5, that'll be a great buying opportunity. But if it has a tight day here, that you could even buy it over yesterday's high. So that's Wolf, and the strength has been incredible. A big, almost 50% move with a little retracement. It's not really little if you measure from peak to trough. It's something like 20% down, but super strength. And do you want to have super tight risk on stocks that move, or do you want to get in stocks that don't move and just say, whatever, I'll just throw my money in here and read X or read the Wall Street Journal, and hopefully they'll mention my stock and it'll go up in like 6 months. It's like, for me, that's not interesting. So Iron's not really in the conversation. Cypher is, I did actually take a chop at it, so I should eat my words. But you notice when I did take a chop at it, I just, what is this loss here in percentage terms? From 20 to 19.5. That's, what is that? 2.5%, I think. Yeah. So no big deal, right? And might drift around, might hold on this moving average. I don't care. I think Wolf is looking better. And just to be clear, there is another company called Wolf Speed. Don't confuse WULF with Wolf Speed. Wolf Speed is this sort of bankruptcy company. So just mentioning that for clarity. And then as we look at other companies sort of around the horn of stocks that move, well, here's what's in the conversation. So again, Nebius, not that interesting. SanDisk, the memory names, having a little bit of a rough time of it here. So, I feel bad because I just mentioned this one, but this is where tight stops come in. If you do buy this one, and you're looking at something like whatever this is, 235, well, it immediately sold off. So it didn't even give you, it barely even hit 235 at all. Look at that in a 1 minute just to show you exactly what happened. This is like a little bit of a post-mortem. You get in immediately. It's not super liquid either. This maybe a 10-minute chart is more reasonable. If it trades less than 100,000 shares in 10 minutes, that's a problem. But it doesn't. There's plenty of liquidity, and it's a $200 stock. So this is why you set a stop. I mean, this one candle went down 4%. So you get stopped out immediately. No big deal. Let it set up again. And We saw, Micron was a little extended. It's selling off, WDC selling off, Seagate selling off. They all move in lockstep. So it's kind of a real-time example of, the stocks that have extension in other areas of the sector can get pulled down, and that's what just happened to SanDisk. So as always, my ideas are about 20 to 30% right. Of course, with those 1 out of 5 being right, they return more than all the losses, in my opinion. So that's why you should listen if you already don't and somehow are listening to this from some sort of otherworldly portal. So SOUN is holding up a little bit, but just not a lot of motion here. BBAI probably looks a little bit better. It's a little bit choppy, but something to be aware of in terms of where to focus on in terms of these robotics names. Serve held up as well, and are these companies are jokes, but startups are jokes, right? Until they're not, so that's fine. PDYN, not interesting, and then iRobot. It's hard to see if this is bankruptcy squeeze or what, but it continues up, so that's really all that matters. Other stocks that are moving a lot, CLSK actually is starting to look a little constructive, so keep an eye on that. This looks like a little bit of a breakout opportunity right now, so definitely interesting. AAOI had a big move. This was a big move in all of the optical electronic stocks, so just another example of what to look for, right? If you can, here, I'll try to get some of these names off the chart. I can't get all these lines off the chart, unfortunately, because they're actually useful. These things are volume as well down on the bottom. You can't see all of them, but trust that there's volume bars here, and it's in the almost 10 million, which means there's about 200 million, which means you can put 2 million in the stock at the click of a button and not move it, which is the kind of people you want trading the stock can do that because they make smooth moves. So you see how this had a nice move up and then went sideways, and all these lines start to come together. That's what you want. All these sort of Christmas tree colors coming together means that, well, it means what you're already seeing with your eyes, which is that the average price is converging, whether you look at a 5-day window or 10-day or 15-day. And when that happens and you start to get a little bit of motion to the upside, that ocean just whipsaws upwards. So big wave move. This is 30-40%, and it's kind of corny. Optoelectronics networking, it seems like 1990s Cisco stuff, but everything that AI is doing now is built off of the shoulders of companies that have been around for 50 years. I mean, IBM was the original AI company, right? Watson. So all these companies are getting a trickle-down boost. So you can't buy AAOI now. I'm almost sorry for mentioning it because it's an awesome move to have missed, but it gives a great picture of what a move up can start to look like before it happens. Quantum names also in the conversation, IONQ right there, but not really interesting enough for me. Just no construction, a little sell off. It's kind of more holding than building. Riot, though, more interesting. These Bitcoin miners are probably all catching a bid if we look around. Mara, I'm sure, is starting to do that as well. But yeah, INSP selling off a little bit. Rigetti is another quantum and a firm. Buy now, pay later. No, nothing interesting. Nuclear is completely uninteresting. And when you look at Oklo, you're basically seeing SMR and NNE in one stock. So Oklo is the Sam Altman's head of the snake sort of stock. And I mean that in the most respectful way possible. A-Lab holding up, but just been choppy as heck, so I don't know if you want to play that. And then these retail names have just been on fire. Abercrombie and Fitch having a big move up, and if you look across the board, AEO, it's a little sloppy, but 4 green days in a row. Urban Outfitters trying to break out, and then Kohl's interesting as well, holding this high volume close. So the earnings candle close is the most important level in the entire stock market. So it's repeatable. Every stock that's big has earnings. So super easy risk level. Institutions buy above there, below there. You know, it looks like a poor earnings reaction and everyone wants to run for the door. Battery names holding up. And really ought to look up what ETNTG does, but it just hasn't gotten to a level where it's interesting, but it's just trickling up. IoT, you know, no surprise this sold off when you look at a 5-year chart. This is basically choppy POS consistently. So you kind of just have to look at past behavior to predict future behavior. And it may be judgmental, but it's rarely wrong. And then Joby, electric vehicle takeoff. This is moves in lockstep with Archer. So those actually look a little bit interesting. You know, shades of gray here, but maybe Archer slightly more just because of the lack of wicks on the tops of the candles, which indicate selling pressure. There's just a lot to look at here, but a lot that needs a little bit more sideways, I think. ON is it's this semiconductor company, yeah. So semis, SHM, that's not what it is at all. It's very close to that. I always forget what this semiconductor, SMH, that's very close. Selling off a little bit. So as has been the case for the last few weeks, the stocks that everyone wants to, you know, get excited about are not super exciting. You know, AMD, NVIDIA, they're just not where the money's flowing right now. So, you know, with that in mind, just no need to worry about that, but definitely don't buy them right now. So yeah, Joby though, Joby looks interesting. And maybe semis will shape up. It's just not right now. AVAV, another drone stock that's a little bit bigger, selling off. The drone stocks in general, I think ONDS is the only one. UMAC, this is a very similar theme a lot of these names have, where they've been curling up a little and then leveling off. Red Cat in that category as well. But until they really catch a bid like SAR might, you know, you can get 50%, but you're also dealing with these single down days can be as much as 10-15%, which is extremely scary. You have to have, you know, expert level risk control. Not really. I mean, you just have to set a stop. But some brokers, you have to remember to set that stop every single day. So that's something to be aware of, because it'll not be good till cancel. It'll cancel itself. So that's pretty annoying, right? CFLT is some sort of a merger situation. You got to avoid mergers and acquisitions whenever possible. But yeah, there's a lot of companies. All these companies I'm mentioning right here have average daily ranges of 20, you know, over the past year on average. Now, that is not exactly true, because that doesn't make any sense when you look at some of these charts. But they definitely move at least more than 5% in the past 10 days for the most part. You know, 4, 8, 7. You can see these numbers up here in the corner, which means that they're interested in, they're interesting movers, and they're also liquid enough. I have an additional filter on here. I'm just making sure I'm telling you exactly, you know, how you can do this on your own. I mean, we talk about this in the Discord as well, but that's the sauce. So the main ideas, though, Tesla, right here. PL as well, although that one seems to be going, you know, so act fast. Or hopefully it'll sell off over the weekend when you see this. And then Wolf, you know, did have a little failed breakout, but it seems to be accelerating now. So if you like these ideas, hit that like button. If you want a free course on how to find the next NVIDIA without gambling on startups, hit that subscribe. And if you want answers and you have questions, or, you know, you made a little money with these ideas, head over to stockscommunity.com. You know, give it a 7-day trial. If you're making money without knowing what you're doing, imagine what you could do when you get to ask questions and all that. So that is my offer to you.
Sam Putnam.